What is going on, everybody? And in this video, we're providing you a state of the market and stock picks for April 19th, 2023. So if that sounds like something you're interested in, consider subscribing, as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. So, good old earnings mode. We have Netflix on deck. We got the first big tech on deck. Essentially, they came in at 2.88 versus 2.86 estimate. Revenues are 8.16 billion versus 8.18 billion estimate. So as you can see, they are barely skating by. Nonetheless, I mean, it's not surprising. These are a lot of things. A lot of these earnings, people are expecting some huge beats. Um, you have to understand that these expectations are so low. Not only are they low, but you have to understand what's currently going on. And what I don't like is that a lot of these media outlets and everything else, they're trying to paint this grandiose picture that everything is fine and we're pivoting and we're getting out of here. Understandably, you don't want people to not have hope, right? You always want to provide hope. This is why hopium was such a powerful tool last year. But at this point, I think the market in itself has been beaten down by submission just with all the bad news and understanding that it's going to get a lot worse. And Netflix is no different. We have to understand that people are skipping meals and they are in a massive debt, massive delinquencies. People are in a very tough spot. People are getting laid off. And again, to think that SVB and Credit Suisse were the only banks that were going to go down, that should be concerning. But with all that being said, things are in a very bad state, and people are agreeing that it's going to get a lot worse. But again, the media will paint that everything is fine and everything's okay to try to stabilize essentially the consensus so that we don't draw panic. That's the last thing we want is more bank runs, and understand that people have been pulling out money completely out of the financial system and purchasing assets with those. And this is where this demand could be coming from, is people are liquidating not only their assets and shifting them to the bigger banks, but also understand that they may be purchasing assets, and that's where the demand might be coming from. And again, why the big banks have been doing so well, and a lot of them just aren't doing great. They're barely beating, right? And their expectations were extremely low anyway. But JPM will still run because, again, with all people are going to put their money in the best bank out there just in case, because they know the Fed won't let it fail. But we are in a failing system, right? We're in a debt-based system, and this is what happens. And so, with that being said, Netflix again has a crazy sell-off after hours and spiked back up, only to start selling again. We'll see where it ends up in the morning, but nonetheless, people are going to cut. Right, you have to understand, Netflix is one of the cheapest forms of entertainment aside from food, right? And understand that people will purchase food and maybe Netflix, and that is going to be your bare minimum entertainment to get by. And during times like this, because you can't go out, you can't go driving the car around to places and exploring places because gas is expensive and getting expensive, and everything else to just feed yourself in general is very expensive. To house, to put yourself in shelter is extremely expensive. So anything aside from those basic necessities, you're hurting pretty bad. And so people will shill out a little bit more just for Netflix, even if that does mean skip a meal just to have some form of entertainment. So being said, we are rolling into some next big earnings tomorrow. Tomorrow's going to be some massive earnings. To be honest, we do have Tesla tomorrow. We have ASML in the morning, which is going to be huge. ASML, big impact on chips. You got Ally in the morning. You got tons of banks in the morning again. Again, today we started having sell-offs with Goldman Sachs. Goldman Sachs didn't do so hot today. Um, And then, like I said, you got Tesla and IBM tomorrow, and then Lam Research. You got a lot of chip news tomorrow, and you have Tesla, which is one of the big ones as well. So um, this is all setting the stage for the next 2 weeks with some of the bigger ones like Amazon, uh, Apple, Microsoft, Google. Google's been hit by a lot of different bad news over the past couple of days and taking some heavy hits, potentially losing Google on Samsung for Bing. And so, these things being said, this is where things essentially it's almost like a beehive, right? And stirring the beehive, like things are getting so bad, companies are going for each other's throats. And that's where we're at, right? You start seeing chaos in the streets and then business. It doesn't matter where you are at this point. When things are doing really bad, people are can be very brutal about things, and this is the kinds of things that you see. So being said, we can flip back to the SPX real quick. I just wanted to start out with Netflix. But the market in general, again, still very flat, very undecided. This was actually quite interesting. The market tried to rocket out of here this morning. I mean, this candle coming in here was very strong, but it flipped very quickly. The market doesn't want this thing ripping out of this current zone. Something I've talked about. If we can't break here, if we can't break essentially this 4167, it's not saying we can't. We could bump up a little bit more. I think we can go up to the 4200. But if we do break above that, I think that puts us essentially in that next range. But again, the price action is telling you one thing. This is something I want to try to get straight with all the jazz, even the stuff that I talk about here. There are two things you really need to be paying attention to. One, that the price action is saying that it's not breaking up, right? No, there's nothing changed in the price action. Every time the price runs into this level, there is some heavy selling. And when I talk about heavy, that candle hits it and then it's just absolutely wicking within a matter of minutes. That is concerning. We are getting in the meat and potatoes of earnings. Understand that. If we cannot break here on the general index, that means we're going to flush after 2 weeks. Once all these big tech earnings and all these big industry leader earnings go through, we could very well possibly flush and start pricing in a recession. Because guess what? The Fed talked about a recession. And then the second point being, so the first one being, like, again, let me restate, the first big point being you need to pay attention to is price action is telling you that there's some heavy sellers in the game right now. We knew that going into the end of last year, that there was a lot more sellers than there were buyers. You have to understand that the price action is still showing that. The price action is waiting for earnings to be over, and that could be the gauntlet that essentially drops this. And then the second point being that the Fed are still quantitative tightening. They're still tightening. Nothing has changed. The dynamic of anything has not changed yet, and things are still bad with all the things that we talk about here. So if anything, out of all the things you pull away from here are essentially those two things, is that the price action is telling you that it doesn't want to break the current level. The market's not letting it break because there's something, it's almost like it has a piece of information. It's waiting for this cycle, this normal earnings mode cycle to finish so it could start selling, and understand that anytime you have a big level, so you have a level like this, it keeps hitting it. You have to understand that this is how you get liquidation, right? This thing's bounce back and forth. You can even claim that this was the bottom here, this bottom range here, that this liquidated. You're going to get a bigger break up. See, is typically you have a zone range here, and then you'll get a big break. That's your liquidation point. And then that's typically when this thing flips, because you have all the essential, the people playing short side, they have their stop right above here, right? And understand you get this liquidation break. So it breaks, it essentially ties out, essentially liquidates all those shorts, and then it just dives. The same for here, right? You could say the same for this upward moment. Since we haven't really been doing much over the past couple months, we've just been kind of playing this range right here. So this could be the same thing you could talk about here, right? This is essentially been the strong support. So we've hit here a couple different times. Liquidation, because they know everybody is buying around this area, and at their stop right here, liquidation, and then institutional buying, bam, right back in and go up into the next. Essentially, this was earning cycle, done, earning cycle, uh, done, earning cycle, done, earning cycle, and then could, like I said, could potentially break. Like I said, you can pull up to this range up here, even up to 4,300. If we had some really good earnings, but things are not good. Things look bad, really bad. And so, being said, even if we do get a pump, like I said, it could be that liquidation spike, and then we go back down. Very strong possibility. The sentiment of the market hasn't changed. Price action is telling me that's what price action is looking like right now, is that it wants to go down, but it's is right in the middle of earnings mode, so it's going to let earnings mode pass, and then we're going to price in recession, because guess what? Fed said recession, a mild recession. There's no such thing as mild. Things are going to get worse. And one of the biggest points we need to be focusing on here is that you got mid-sized to small banks that are very much susceptible to failing, and they also hold a lot of commercial loans, and something we've been talking about on this channel. And not only that, but you have to also understand that they hold a lot of payrolls and stuff for small business, and that if small business goes under, small business employs a lot of the workforce, and that in itself, you get a couple failed banks, a couple small business failures across the U.S., and you're looking at a huge disinflation. Ultimately, is what's happening, because you're going to get tons of layoffs, and it's not just going to be in tech. For all those people that think that because they're not in tech, they're okay, and that's not the case. Right, McDonald's still hasn't announced all their layoffs, and they got earnings coming up as well. So things are in not a good state. And to say that we're going back into a bull market, how they are going back into a bull um, range, how is that? Again, we haven't broken out. None of this is showing to me that this is broken out. Technical wise, nothing shows to me. Sentiment wise, nothing's telling me anything has changed. Fed is still quantitative tightening. Now they are saying that we get one more in May, and then they're going to pause in June. That's about what I'm expecting. But again, I think they're well aware of how much more they can push it before most stuff breaks. And I think that June is going to be waiting. So if they put another 25-point basis move, they're expecting breaks. If nothing breaks, I'd almost put money on the fact that coming in June, that they would raise another 25 if nothing breaks after this next 25-point basis move, because it's like they're almost expecting it, right? And then they're going to start talking about recession. I wouldn't be surprised if we get more headline news, especially during monetary policy, right after big earnings. So you got one more week of like solid earnings, and then you get monetary policy. Monetary policy is on the 3rd. Yeah, so you got this week, you got finishing this week, and then you got a big week full of Apple and Microsoft and all that. And the following week, right after that, you're going to have monetary policy. What's to bet that they're not going to come out and say we are going into a recession, and that we not sell off heavily pricing in a recession? You have to understand that they mentioned that in the report. Now they're going to start talking about and reiterating it all next week. You're going to get big earnings, and guess what? You're going to hear a lot from the Fed, because actually you should start hearing a lot from the Fed this week, because next week is blackout period for the Fed. So you won't hear anything from the Fed come next week. Going into monetary policy, and then you have monetary policy on the 3rd. So things are perfectly setting up for potentially something huge happening right here after earnings, especially next week, because then that sets you up into monetary policy. The Fed can come out and say 25-point basis move. We feel like we are going into a recession. Bam. And that's the thing. And that's the trigger that causes us to price in a recession. How far do we drop from there? Well, at least we know we would, if we would start selling heavily, that we'd come to at least the 3,800. And if we decided to break from there, then that 3,600 was a solid wall. We knew that from a while back, when quote unquote, on this spike here, when we thought that people are calling this the bottom here, when we had that thrust, it was right after Powell, because we had that massive spike up, and then that was a liquidation spike, and that's what I talked about, the liquidation spike, and that was literally within like an hour. This thing absolutely crashed 100 points, and then bam, it shot straight up, and then went up into earnings end of year, and then we've had these earnings. Next earnings cycle is what we're in right now. See us at least coming back down here after this earnings cycle, and then we'll see if they call recession right here, May 1st or May 3rd. That could start causing us to start selling off, and then who knows how far that goes. Again, it really just depends on what message is being displayed in the media. Again, a lot of these people will not answer a question if we're not going into a recession. If you've noticed, none of them will answer that question. They'll walk around that question until they're ready, and then I wouldn't again be surprised on the 3rd if that's what they say, recession. Then that's all you start hearing across the board. You're going to all essentially release that message in unisync, and then at that point, we price in a potential recession. And what does that look like? We'll at least revisit the 3,800. Again, if things really start getting bad, we could revisit again roughly that 3,600, something we've talked about, and then potentially even lower, right? Maybe even 32. Like I said, normalization is down here. Do we get there? We don't really know. It's all about timing. But ultimately, I think for us to get quantitative easing next year, for us to actually start getting cuts this year, you're going to want the market to be down here, is what I'm trying to say. And I think the Fed are very well aware of that. This is why they are starting to do another 25-point basis move. If nothing breaks, then we do a credit crunch. And if the credit crunch doesn't take everybody out, credit crunch is essentially the dagger that will make sure that everything starts to break. Understand that, because that's where everybody is at. And so if another 25-point basis move doesn't do it, fine. In June, we'll pause and we'll do a credit crunch. Essentially, siphon any kind of credit anybody has, companies, every person out there will get all their credit essentially taken away. Pretty much, you won't have any more credit, and then see what happens. Then see how much it breaks and how quick. And then at that point, then you could see a potential massive flush down here to 3,200. And then it'd be like, okay, now we're done pausing, emergency rate cuts. It starts alleviating some of the pain once it starts really falling. And then at that point, could see true bottom. And then, like I said, we could recover to the back half of the year after the couple of cuts. People will start potentially buying. Then a lot of people are going to be a lot laid off too. So just keep that in mind. So people you'll have to start injecting money again, but that will lead up until next year. Could get some quantitative easing. Again, it's all depending on the timing of this thing, but we do have elections next year. And so if they could get quantitative easing by Q1, Q2 of next year, leading into election, probably more so like Q2 because it's closer to election, that, hey, we helped everybody out when the market was down, right? That's how you re-elect people. Savior, right? I would not be surprised if that's what plays out. Again, I don't like to project that far out. I try to have some sort of scaffolding to kind of understand what could potentially happen. But more so, that's what I'm aiming for potentially happening. We need a big crash. We need normalization. We need to get down to this level. We need a recession. May 3rd, let's see if we hear about what the whole message across the board from the Fed, the administration, from essentially media. Recession. We're in recession, and then we're down here, and then we price in a recession. We'll see what happens. I mean, it's just my hunch and something I feel like we've been there. We've been grinding up here for a very long time, and every time we get up here, we get rejected hard. We got rejected hard off this level. Again, the market will let it slide up a little bit because it is earnings mode, and then rejection, hard rejection. See if we come back in tomorrow, we're going to get another hard rejection. To big tech in itself is looking very weak, but we'll see what happens. Bitcoin, again, still holding. roughly around here, that 30K mark. Again, I don't think it's decoupled. I think you're going to get a crash with this just as well as what you would with anything else until, it's not to say I think crypto and Bitcoin would lead the way on the recovery side of everything. I think that's very much true, because at that point you're really risking after a huge downfall in bricks right across, right, catty corner from us, threatening the dollar, threatening the U.S. Um, Understand that's a real threat, and that yeah, Bitcoin would very well do extremely well during that time. And so just be mindful of that. I do believe it will lead the way when we do come out of this recovery. So I'm not trying to downplay Bitcoin. I think Bitcoin will do tremendous. But again, it's all just depending. You have to understand that there's been a lot of things passed against Bitcoin as well. Gary Gensler was in front today testifying, and he was getting hammered for what he was doing as well. So again, we'll see. But Bitcoin, again, holding for right now, needs to hold to 30. But if it does break back down there, I think it could drop down to 25. And then we go about 5K increments, drops or pushes on Bitcoin. It's typically how Bitcoin's been playing. So we'll see what happens. And that this could even be just money put in from the banks because people don't know where to put their money until they figure out what's going on with the dollar. Could be, could not be. We don't know. People maybe are transferring it so that they can purchase assets. We don't really know. I think people are liquidating a lot of their money from the banks and pulling a lot of money out of the banks to either one purchase some sort of assets, whether that's some Bitcoin and some real estate or something, just so that they have actual physical assets as opposed to just a dollar that could go and essentially be obliterated to nothing, right? If that's what happens. So we'll see there. Tesla again, very choppy, not really a lot. And this is not a typical Tesla pump. This is a Tesla pump in earnings, which we've kind of had that almost a month ago, and then all of a sudden it's just been dead. That's not typical Tesla earnings. So that's very interesting to watch, which makes me think the market wants to turn over, just waiting for earnings to be done with, and we get more continued. My thing is we're going to see recession numbers. Everybody's like, oh, we're going to just blow away expectations. Let's see. But what if we get recession type numbers, and then May 3rd is, yeah, we're hitting recession? That would not surprise me. And then we price in a recession, and then that would be it. And then we would recover in June, and we would start slowly pushing up, even though the market would push up, but the economy would still suffer to the point to where we get quantitative easing at some point early next year that would essentially help and feed into election time. So we'll see what happens there, but that's what we got for now. BA, again, just chopping, again, 220 or 195. Just playing that range. Again, we'll see. This thing isn't going to move until the market moves in general. It's moving very much like the market. Give or take, it really doesn't matter what's going on or what's going on with Boeing. Boeing, cut massive production numbers, and somehow it's still sitting at 208. But we'll see how that works. But it does play heavy into the market. JPM, again, does play heavy into the market. We are watching this level here. Let's see if it can break the 145. If it can, it will definitely stabilize the market. If the banks are pushing strong, that will help stabilize the market. Again, you have to understand that this was because of a bank run. This wasn't because of JPM. This was because of bank run and people being scared. This has nothing to do with JPM. Just be mindful of that. GS took a massive hit today. It did recover some, but even if you're looking at this, it looks like it could be a retest and then another drop. So we have to watch Goldman Sachs going into tomorrow. Bank of America, another one with earnings. Massive selling did spike up. We'll see if this thing will start pushing. It does need to break the 33 mark up here to make new highs. Aside from that, it needs to roughly hold the 29 mark. If it does break below that, you're going to at least see the 27, and then it breaks below that and continue selling off pretty heavy. So that's pretty much where we're at. We don't really got much more. I don't really want to make this video that much longer, but just really emphasizing those things that you need to really be paying attention to. And then there's a lot of stuff out there. Again, don't like being a bear. That's just not my thing. But being in the market long enough, there are certain cycles that have to play out, and it doesn't matter how much you fight it; it's going to happen either way. So all you're doing is prolonging the inevitable from happening. And I'm not talking about years down the road. It may take another week, 2 weeks, maybe a month, but it'll be there. You just have to be patient. So ultimately, that's what I'm seeing. Maybe I'm wrong, but ultimately, I felt like my intuition in the market has been very good, um, very accurate for the most part. So we wait and we see. Maybe I'm wrong. Nothing else. You just let the natural cycle of the earnings finish, and then you'll get a normal down cycle where you can accumulate. At least you know that the market isn't crashing. Then at that point, you'd be ready for the next cycle in the back half of the year. So just be ready for that. So nonetheless, that's kind of what I'm looking at. But thank you for following me. Thank you for hopefully dropping a thumbs up, comment what you're looking at, what you feel, where your thesis is, what you feel about the markets. And until next time, I'll see you guys later.